Wall Street just stepped into something it hasn't felt in a long time. A danger zone. I'm talking about the kind of zone where everything looks normal, until it suddenly isn't. One minute, gold is shining like a safe haven. The next minute, it's crashing. Bitcoin is breaking down. Tech stocks are trembling, and the AI trade that was supposed to be unstoppable is starting to unravel right in front of us. This isn't just another red day. This feels like the floor shifting under the entire financial world. And listen, if you love stories like this, the kind that pull back the curtain on what's really happening behind the markets, hit subscribe right now and tap the notification bell, because we cover the storms before they hit full force. And trust me, what's happening right now is not something you want to miss. So let's set the stage. Picture Wall Street at the start of 2026. Confidence is everywhere. The market has been running hot. Big tech is still leading the charge. AI is the golden word. Investors are convinced we're entering a new era, a future powered by chips, algorithms, and trillion-dollar promises. Precious metals like gold and silver have been soaring too, almost like the world is hedging its bets. And Bitcoin is still sitting up there like a digital titan, holding the line after years of chaos. But then something cracks. It starts quietly. Futures begin to slide. Nasdaq dips. The S&P wobbles. Traders shrug at first. Maybe it's profit-taking. Maybe it's just nerves. But deep down, something feels different. Because this isn't just one market moving. It's everything moving at once. Stocks down, metals whipsawing, crypto sinking. And the question in the air is simple. What do they know that we don't? Here's where it gets wild. Gold and silver, the so-called safety net, suddenly do the unthinkable. Silver posts one of the biggest single-day drops ever recorded. Gold plunges harder than it has in more than a decade. Think about that. Gold is supposed to be steady. Gold is supposed to be the thing you run to when the world gets scary. So if gold is crashing, what does that tell you about the level of panic under the surface? This is story beat number 1, the first tremor. The warning shot, because when even the safe haven starts falling, it means people aren't moving calmly. They're rushing, they're liquidating, they're scrambling for cash, and that's when the danger zone opens up. Now, at the same exact time, Bitcoin is breaking down. Over the weekend, it slips below $80,000 for the first time in months. Then it keeps falling. 78Ks, then whispers of 73K support. That might not sound dramatic to someone outside crypto, but inside the world of traders, that's a psychological cliff. Bitcoin isn't just a coin anymore, it's a symbol, a barometer of risk appetite. And when it starts sliding while gold is sliding too, you realize something terrifying. This isn't rotation, this is retreat. People aren't moving from one asset to another, they're running from everything. And then we get the second tremor. AI doubts. The AI trade has been the engine of this market. Nvidia, Microsoft, Amazon, Alphabet. These companies have been treated like invincible gods of the new economy. AI was the narrative, the unstoppable force, the reason valuations exploded, but suddenly the narrative starts to crack. A Wall Street Journal report drops like a bomb. Nvidia's pledged a $100 billion investment into OpenAI might be on ice. Let that sink in. $100 billion. That's not a normal investment. That's not a business deal. That's a declaration of war-level spending. The kind of money that tells the world, we are all in. This is the future. And now, there's doubt. CEO Jensen Huang steps in and says it was never a commitment, that it was non-binding, that they'll invest one step at a time. And the market hears that message loud and clear. Translation? Even Nvidia is hesitating. Even the king of AI chips is pumping the brakes. And if Nvidia is hesitating, then what does that mean for everyone else? This is story beat 2, the bigger reveal. The moment the audience starts to realize this isn't just about gold or Bitcoin, this is about confidence. Because markets don't run on math, they run on belief, and belief is fragile. Now, as all of this is happening, earnings season is rolling in like a storm front. Amazon, Alphabet, AMD, Disney, Palantir, the titans are about to report, and traders are watching one thing more than anything else: CapEx, spending. How much money are these companies throwing into AI? Because AI is expensive, data centers are expensive, chips are expensive, power is expensive. The AI revolution isn't happening in the cloud, it's happening in concrete, steel, and electricity. And here comes another twist. Oracle announces it wants to raise up to $50 billion in debt and equity sales, just to build more cloud infrastructure. $50 billion. And Oracle's stock has already been crushed, down around 50% from its highs. So investors start asking, is this sustainable? Is this brilliance? Or is this a bubble? And suddenly, a phrase starts spreading like wildfire across trading desks. AI, ROI, artificial intelligence return on investment. The fear isn't that AI doesn't work. The fear is, what if it doesn't pay off fast enough? What if these trillion-dollar bets take too long? What if the world just poured insane amounts of capital into something that won't deliver profits the way people expect? That is the seed of doubt, and doubt is deadly in markets priced for perfection. Now, while all of this is unfolding, there's another force moving quietly in the background, the Federal Reserve. President Trump nominates Kevin Warsh to lead the Fed, and traders instantly start speculating. Warsh is seen as hawkish, tough, conservative on inflation, the kind of leader who might push harder to reduce the Fed's massive balance sheet. $6.6 trillion. That's how big it is. And if the Fed starts tightening liquidity again, if the money spigot closes, then risk assets feel the squeeze. Stocks, crypto, metals, everything. This is where the danger zone deepens, because it's not just one catalyst, it's multiple dominoes lining up. Gold collapse, Bitcoin breakdown, AI doubts, Fed uncertainty, and now, macro data looming. The January jobs report is coming. Payrolls expected to add only 65,000 jobs, unemployment holding at 4.4%. But in a market this nervous, even a small surprise can trigger chaos. And that's what makes this moment so intense. It feels like the market is standing on the edge of a cliff, waiting for the next gust of wind. Now let's zoom out for a second, because what we're watching is bigger than numbers on a screen. It's human psychology. The market rallied hard in 2025. Valuations soared, people got comfortable, greed crept in, everyone started believing the narrative. AI is unstoppable, gold is protection, Bitcoin is digital gold, stocks only go up, and then reality hits. The trade was crowded, the positioning was extreme, and when too many people are leaning one way, the smallest shift can knock everyone over. That's what a danger zone is. It's where confidence becomes fragility. Now here comes the climax. The twist isn't just that assets are falling. The twist is that everything is falling together. Gold, which should rise in fear, is dropping. Bitcoin, which thrives on liquidity, is dropping. Tech, which was leading the future, is dropping. That's not normal. That's systemic risk behavior. That's the market screaming one thing. We need cash now. And when cash becomes king, everything else gets sold. That is what crashes are made of. Now, does this mean the world is ending tomorrow? No. But it does mean the market is entering a phase where volatility rules, where narratives break, where trades unwind violently, where the next chapter is uncertain. Because once confidence is shaken, it doesn't come back overnight. And here's the lesson. The market is not a machine. It's a crowd. And crowds are emotional. Crowds get euphoric. Crowds panic. Crowds stampede. And right now, the crowd is nervous. This is the mind blow moment. We're watching the AI age collide with old school fear. The most futuristic trade in history, meeting the oldest emotion in markets, survival. So what happens next? That's the question. Does Bitcoin find support at 73K? Does gold stabilize and reclaim its safe haven role? Do big tech earnings restore confidence? Does Nvidia's hesitation spread? Does the Fed shift the entire liquidity picture? We are standing at a crossroads. And the next few weeks could decide whether this is a temporary shakeout or the beginning of something much bigger. Now I want to hear from you. Do you think this is just a healthy correction? Or the first real sign that the AI-driven market is cracking? Drop your answer in the comments. I read them all. And if you found this breakdown valuable, share this video with someone who thinks the market is always safe. Because storms don't announce themselves loudly at first, they start as whispers. And if you want to stay ahead of those whispers, hit subscribe one more time, tap the bell, and stick with us here at Economic Storm Watch, because Wall Street just entered a danger zone, and the next move could shock everyone.